Scalping is a high-frequency trading strategy that involves making quick trades to capitalize on small price movements. It is popular among day traders who aim to profit from minimal price fluctuations in liquid markets, such as forex, stocks, and commodities. Scalpers rely on speed, precision, and discipline, entering and exiting trades within seconds or minutes. They focus on small gains that accumulate over numerous trades, reducing exposure to market volatility. This strategy requires a robust trading platform with low latency, fast execution, and tight spreads, as even a slight delay can impact profitability. Scalpers often use technical analysis tools, such as moving averages, Bollinger Bands, and support and resistance levels, to identify entry and exit points. They also monitor order flow and market depth to gauge buying and selling pressure. Risk management is crucial, as rapid trading can lead to significant losses if not controlled. Traders use strict stop-loss orders and position sizing to limit potential losses. High leverage is often employed to amplify small price movements, but it also increases risk. Scalping demands intense focus and quick decision-making, making it suitable for experienced traders who can handle high-stress environments. It requires continuous monitoring of charts and market news, as unexpected events can cause rapid price swings. Unlike swing or position trading, scalping does not rely on long-term trends or fundamental analysis. Instead, it exploits short-term price inefficiencies. Traders may use automated trading systems or algorithms to enhance speed and accuracy. However, successful scalping depends on discipline, as impulsive trading or chasing losses can quickly wipe out profits. It is also crucial to have a deep understanding of market behavior and patterns. In forex trading, scalping is favored due to high liquidity and low transaction costs. Traders often focus on major currency pairs with tight spreads, such as EUR/USD and GBP/USD. They aim for a few pips per trade, leveraging volume to accumulate gains. Some brokers restrict scalping, so choosing the right broker is essential. Additionally, high-frequency trading firms and institutional investors also engage in scalping, leading to intense competition. Retail traders need a well-thought-out strategy and the ability to adapt quickly to changing market conditions. Overall, scalping is a fast-paced, high-risk, and potentially rewarding strategy that demands precision, discipline, and extensive market knowledge. Those who master it can achieve consistent profits, but it requires dedication, resilience, and the right trading tools.